Well, US markets have rebounded strongly today after good corporate earnings from companies such as Alexion and Facebook. Now we're joined by Grey Wolf Execution's Mark Newton. Mark, we've seen big swings in the markets over the past week or so. Some of the central banks and emerging markets have moved to try and stabilise their currencies. How effective have those moves been?
I think in the last couple of days we've seen more and more signs of stabilization in some of the emerging markets and some of the currencies, and so that's definitely a good sign. Particularly China ahead of their Lunar New Year, the holiday, has shown a few signs of bottoming out. So look, certain countries are in better shape than other ones fiscally. Certain countries are run a little more responsibly, give their economies a chance to be a little more competitive, and so those don't necessarily have to worry as much as countries like Turkey and South Africa and this and that are in a bit worse shape. But in general, I see the dollar starting to move up against some of the majors today, and that's I think a good sign. We obviously got very good economic growth this morning and good GDP reports. You look at the market, I think it's tough to make too much out of a one-day bounce like we've seen. But there are a couple things that are encouraging, and one is that the NASDAQ is back over January lows. The NASDAQ has been the clear leader throughout this whole move. And so until you see real signs of the Russell and some of the small caps turning over against the broader indices, that's definitely a good sign. And so the NASDAQ and the S&P are in much better shape than the Dow. Some of that was due to the recent reorganization in some of the companies in the Dow. But all the indices seem to hold pretty critical levels of support right near December lows and have since stabilized and moved higher. So, I think we need to move up a bit more for people to gain some confidence in buying in. But it's nice to see sectors like technology do well, ahead of obviously the big earnings from Google and Amazon. But this sector has been a real standout and is going to really outperform for the month. And so if you look at this month's outperformers like healthcare, which has been a consistent winner, technology, financials, those aren't too much of a surprise. Utilities is the one that people are scratching their heads as to, and the fact that it's a down month, people think, well, potentially utilities can outperform. On the flip side, consumer discretionary, which was last year's best sector, is now going to be this month's one of the worst. And so that's really the first signs of cracking in terms of one of a true risk-on sector, to see consumer discretionary start to turn down. And some of these media and retailing stocks have been real laggards, and I think that probably continues throughout the year. You could get a little bit of a balance, but it looks to be a real change in some of these.
Okay, and just briefly, Facebook has obviously rallied really hard today. Yeah. For many traders, it's their favourite sector in terms of the outlook for 2014. Are you one of those?
I love technology. I think, Facebook is firing on all cylinders. It's one of the fastest growing companies to have reached $150 billion, and they've beaten for 6 straight quarters now. The real question for them is they've captured already about half of the world's internet users, and how they continue to grow, that's going to be difficult. But tech is something that's shown more and more signs of strength since last fall, and I think that continues. It should be a sector to overweight when looking at software, when looking at semiconductor sector, and looking at hardware. I mean, all three sectors show real signs of real growth and good momentum right now.
Okay, thank you, Mark. That was Mark Newton from Grey Wolf Execution, and I'm Jane Sell for The Street.